Good Monday. This is Jay Brew, co-chairman of Seafried and Brew. Well, last week we talked about the relationship to the decline in crude, looking at it from the standpoint of its effect on certain states, energy-dependent states. But the things that are keeping me up at night, even though we've now seen oil head down somewhat in this past week, is to around $50 a barrel, is what is happening in the world that troubles me on an overall basis. And the relationship of that, which we've looked at in previous webcasts, is looking at the Bloomberg Commodity Index. And the thing we've been sitting there saying is that that commodity index had gotten down to lows that we haven't seen since the depth of the Great Recession. And yet what has happened now is that these commodity prices have actually gone below that level that we hit. In fact, going to a level that we haven't seen since 2002. So that's a concern. But even more of a concern is then looking at the strong dollar. And it's appreciating in here, looking at the Fed eventually raising interest rates. So these two things have an impact. It has impact in terms of people buying our goods in foreign countries. It has impact commodity prices when we look at its effect on states. So what I wanted to look at was the move in terms of corn overall in here. And what kind of impact would that have on particular states that have large corn producing farms? So I wanted to look at Kansas. Similar that we looked at those energy states is that you can see that Kansas economy has actually gone negative in here as the price of corn has declined. So what other states will be impacted by these commodities? What other states will be impacted in terms of not being able to sell our goods overseas because of the strength of the dollar and its overall impact on the U.S. economy? This is Jay Brew. Have a great week.